Personally, I still think there's a good chance that they're going to try to raise rates before the end of the year because they have a small window of opportunity, meaning that politically it's difficult to raise interest rates in an election year, which is 2016. Also, they really risk the chance of losing their credibility if they do not start to follow through on what they have suggested. And also, although recently they suggested they're worried that the global economy might not be ready for interest rate rises, the US domestic economy is slowly starting to continue to improve. And that should be probably the key driver. So although it's data dependent, as we've heard from the Fed before, it still seems to me incrementally that there's a good chance it's going to happen either the end of this year, maybe December, or the very beginning of next year, but probably not later than end of Q1 next year. First of all the central banks have made it clear that inflation and trying to target a ratio of about 2% inflation is important for them. Historically, you would have in America low unemployment lead to wage increases, which would lead to the inflation indicators going up. What's happened so far is that oil prices have come down quite a lot, so inflation expectations have been low. However, because the so-called base effect of low oil is slowly starting to fall away, we're going to start seeing an uptick in inflation towards the end of the year. That should give the Fed enough credibility to start raising rates again. If we have another month or 2 months of bad unemployment or bad employment data in America, then this could be enough for the Fed to say we're worried about domestic economy. But so far, it still seems incrementally there's more to suggest that they raise rates or not. Personally, I believe that when they do raise rates by 25 basis points, and probably not more, a lot of that is already what we call priced in. It's already expected. So it's not going to be a significant turning point in making the dollar substantially weaker or stronger. And already this year, we've seen that against the euro, for instance, the euro has strengthened, the dollar's weakened. And recently, of course, we've seen that the dollar started to weaken a bit against the other emerging market currencies. When it finally does happen, my best guess is it's not going to have enough impact for the dollar to substantially become a lot stronger. It might marginally become a bit, but it's not going to start a new bull market that the dollar continues to strengthen and strengthen and strengthen. That's not likely to happen. I think it's going to be more very, very gradual.